Costco is one growth stock down 20% that I think you might regret not buying on the dip. In this video, I'm going to talk about why I think that's the case. So let's get right into it. Starting with Costco's annual revenue. What I have pulled up here is a chart of Costco's revenue going back to 2014, and you can see very nice growth here from about 100 billion all the way up to 234 billion, and that's, really good growth, but especially when you consider that Costco is primarily a brick and mortar retailer. So for Costco to be experiencing this kind of growth as a brick and mortar retailer really demonstrates how good they are at what they do. They are an excellent merchandiser. They have gained the reputation with consumers for providing them with really good value, and consumers are willing to pay annual membership fees for the privilege to shop at Costco stores. So all of that has been a tailwind for Costco, and it's also been a competitive advantage because that's one of the hardest things to match as a competitor is to offer low prices to customers. That's one of the hardest things to do, just execution wise, it's difficult to do. Think of the supplier relationships you have to maintain, think of the customer data you have to realize, the logistics, the store facilities, labor, all of that needs to go into providing the low prices to customers. Otherwise, if you miss on any of those characteristics, it could lead to losses on the bottom line for your company, or it could lead to forcibly raising prices on customers, which could drive customers away. So a lot has to work right in order to offer customers the lowest prices possible, which Costco has been able to do for a very long time. And I mentioned Costco offering great value to customers, and that's evident in its operating profit margin. Look at it over the trailing 12 months. Costco's operating profit margin has never been above 4% in the last decade. You look at here, they operate on very, very thin margins. So they count on selling the same item over and over and over again at a large scale to generate higher profits overall. So they make small profit margins on each item, on each day, in each month, in each year, but they make up for it by gaining more and more and more customers, thereby increasing the scale at which they operate, which increases their overall profits, even if they operate at small profit margins. Additionally, even though they operate at small profit margins, that margin has been improving over time. You look at it growing from about 3% operating profit margin to 3.39% operating profit margin most recently. So even though it's thin and small, it's improving. It's moving in the right direction. And Costco, you might imagine, has the pricing power to increase its operating profit margin if it chooses to without losing too many customers, because customers have become accustomed to thinking that Costco is giving them the best value. So if Costco was to increase prices by a little bit, it's not going to turn off very many customers. Speaking of which, I mentioned earlier that members pay an annual fee to Costco for the privilege of shopping at their stores. Costco charges $60 or $120 for the standard or the premium membership to shop at its stores. And uh, throughout its history, it's raised the fee on this about every 5.5 years or so. The time is coming where it's going to raise that fee again anytime now. And management has said it's just a matter of when. They're just trying to get the timing right. And so when they do that, that's going to be a big boost to Costco's operating income because they've got roughly 60 million members, and these members renew at a roughly 90% rate every year. So if Costco, let's say, raises those fees by $10, that's $10 times 60 million at a 90% renewal rate. So let's say $10 times 50 million. That's a nice $600 million in operating income that will increase next year to Costco's bottom line, because that most of that increase just flows straight to the bottom line, right? It doesn't cost Costco very much to raise the price on your membership, right? It just sends you a letter saying, hey, your membership fee is going up. That's it. There is no cost of goods sold. So the $10 is just going to be mostly profit, right? $9.85 of the $10 will flow to the bottom line. Those are just estimates, by the way, but just to give you an idea of how that might work. So for that's one of the primary reasons why I think you're not going to want to miss out on buying Costco stock on this dip here. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. The final reason why I'll give on why you might not want to miss buying Costco stock is because of the favorable valuation. If you look at Costco's forward price to earnings ratio of 31, the stock is priced at the lower end of its average over the last 2.5 years, going all the way back to September of 2021. It's on the lower end of the average valuation you can see from this chart here. So you're getting Costco, an excellent merchant, an excellent retailer at a favorable valuation with this catalyst of the increase in membership fees that could boost operating income and profits over the next couple of years. Maybe they do it this year, maybe they do it next year. It's not certain yet. It's not completely baked into its valuation, baked into its earnings forecast. So you get that catalyst going forward. So for all those reasons, I think you might regret not buying Costco stock on this dip here. All right, so that's all I've got for this video. Thank you so much for watching. I've created a video right here that I think you will enjoy. So please click on that and I will see you over there.